Hey everyone, welcome back to the channel. Today we're breaking down the brand new inflation report for December and what it means for your wallet, the housing market, and interest rates. The numbers came in softer than expected, and that's a big deal, so let's get into it. The latest consumer price index shows that core inflation, that's prices excluding food and energy, rose 2.6% over the past year and 0.2% for the month. Both of those numbers came in slightly below expectations, which is exactly what economists were hoping to see. Headline inflation, which includes everything, rose 0.3% for the month and 2.7% year over year, right in line with forecasts. So overall, inflation is still above the Federal Reserve's 2% target, but is continuing to cool. Let's talk about what's actually going up and what's coming down. Shelter costs, rent and housing, rose 0.4%, and this category alone makes up more than a third of the CPI. It's still the biggest driver of inflation. Food prices jumped 0.7%, but interestingly, egg prices dropped more than 8% just in December and nearly 21% over the year. Recreation, airfares, and medical care also saw increases. On the flip side, some goods are actually getting cheaper. Used cars fell 1.1% and communication services dropped 1.9%. So we're seeing a mixed picture, but overall the trend is moving in the right direction. Now the big question, what will the Federal Reserve do next? Markets are betting that the Fed will hold rates steady at its upcoming meeting. And based on this report, most analysts don't expect a rate cut until June at the earliest. Even though inflation is cooling, it's not quite low enough for the Fed to start cutting aggressively. They want to see a longer trend of stable, near-target inflation before making a move. President Trump even weighed in, calling for meaningful rate cuts. But the Fed is likely to stay cautious for now. So what does all this mean for you? If you're a home buyer, mortgage rates may not drop immediately, but the trend is slowly improving. If you're a seller, stable rates can keep buyers active without shocking the market. And for everyone else, slower inflation means your paycheck stretches a little further, even though real wages were flat for the month and up just 1.1% over the year. That's your quick breakdown of December's inflation report. If you found this helpful, hit like, subscribe, and drop a comment. See you in the next video.